Hello, this is Joe Pryor, the virtual real estate team in Oklahoma. And, we're getting towards the end of the year. We're almost to the end of November. Today's Monday. And my gosh, I finally got a Monday video done on Monday. So I'm very proud of myself, I guess, for not screwing up like I did the last couple of weeks. But, the rates, first of all, just to go with interest rates, they are unchanged at this point. There's kind of a push-pull going on right now. The Fed is got to be very careful in the respect that, keeping, rates going up is a problem for a lot of people, but at the same time, the economy is doing pretty well. Not for everybody, obviously, it's never the case, but enough where inflation is still on their minds and they're still what we call jawboning and saying, look, we still may raise rates. If that happens, we're going to see that in the next week or so, because they have another meeting coming up at the 1st of December, and today is the 27th of November. So hopefully they're going to hold off. Hopefully they're not going to make any changes. If that's the case, rates again will stay the same. Maybe they'll go down a little bit. But, in the meantime, we're here almost to the end of the year. And again, I emphasize the fact that this is where builders want to make deals. Either with owner-occupants where they're going to do a lot of upgrades, and of course, with owner-occupants, they can get a lot more closing cost allowance if they go with an FHA or VA loan versus an investor. But still, that's happening with our builders. Like, for instance, right now with one of our builders, builds a fantastic home, is reducing prices, and has an adjustable rate mortgage that's fixed for 7 years, and it's at 6%. No points, nothing extra that you got to put in. But here's the deal. They're paying 2 points, based on the purchase price. So if it's $250,000, they're giving you a $5,000 allowance. If you want to buy the rate down, then the points are based on the mortgage amount. So if you put 25% down, which is the minimum on this program, then that $5,000 goes a little further. And we're waiting today to get what that buys down to. Now, what I'm hoping for is about a 5.625%, 5.75 at the most, interest rate that may not cost you any money or just a tiny fraction. And so what this allows you to do as an investor, and this is an investor rate, not an owner-occupant rate, it's going to allow you to have decent cash flow. And that's extremely important, as versus having to subsidize your investment. Now, some of you can do that because the appreciation more than makes up for it, but not everybody is that way. And so we like the idea of staying with positive cash flow because prices really haven't come down that much, if at all. And so interest rates are very, very critical. We know it's going to be a while before they come down, but if you have a 7-year fixed rate, then you have 7 years to decide what to do. You can wait for the best rate, and it's coming, 2025, 2026. This is the way the market goes. It goes up, it goes down. Or before the end of the 7 years, you can decide, hey, maybe I just want to sell the property, do a 1031 and move on. But the other thing is typically when you do these adjustable rates with these big mortgage companies, they're going to give you a special deal in order to do a refinance with them. A lot of times, and I know this has happened to me, they paid all my closing costs. I didn't have to pay a dime to go to a fixed rate that's much, much lower. So we have these properties. I think it's a good time for investors to look in these rates, look in these companies, these builders that are doing really, really good deals, and make a move for them. So it's getting towards the end of the year. There's new videos coming up that are talking about the end of the year, what I expect for 2024. Hang with us. There's going to be a lot more stuff coming up for you in the next couple of days.